Hello everybody, this is Toni Turner and welcome to the market now as of about 1 p.m. Eastern on Friday, June 16th. Well, U.S. stocks fell today as Walmart and other retailers were slammed by Amazon's biggest foray into the brick-and-mortar retail sector with its $13.7 billion deal to buy upscale grocer Whole Foods. The deal by Amazon is seen as a threat to supermarket chains and grocers, given the company's readiness to sacrifice margins for market share. And if you look at stocks today like Target, like Kroger, General Mills, a lot of the food stocks have really taken a hit. Walmart sank 6.2% to $74. The stock pressured the S&P 500 and the Dow lower. So on that cheerful note, let's look at three charts that could give us some insight into the week to come. First of all, we're going to look, as we usually do, at a daily chart of the S&P 500 Spider, symbol SPY. This is the ETF that tracks our S&P 500 index. I like to use it because indexes don't have volume, but of course exchange-traded funds do. So we've got the best of all worlds here. Now, as I captured this chart this morning, the SPY was trading at $242.32. We had a new all-time closing high on June 13th, which of course was this Tuesday, right there, at $244.55. Now again, it's trading at $242.34. It's trading right atop the red line here. Now the red line on this screen is the 20-day simple moving average, which we consider to be a short-term moving average. If we move down here and see that there's the green line, the 50-day moving average, that's coming in right now at $239.26. So that is a very strong potential support line for the S&P 500. You can see that when the SPY moved back down in March, it only moved below that line for one day and then closed above it. And you can see that it had gone above the 50-day moving average back in November, pretty much ridden this line right up. But the 50-day is great at drawing trend lines for assets or indexes. And then you can see the SPY move back below the 50-day moving average for about a week, but then popped right back up. Now that's a sign of health, that's a sign of resistance. And then that formed price support here as well, of course, as jumping up and over this 50-day moving average, which can provide, and the operative word is can, support. Why is that? Because a lot of institutional traders, the men and women who really make the market move with their trades, they like assets or stocks or ETFs that come down to their 50-day moving average and then bounce off of it. You can use this line for that. Trading a lot of the big industrial stocks many times, if they're in uptrends over the 50-day moving average and then come down to this line, watch and see if they bounce back up off of it, and when they do, that can actually be a pretty good entry, a pretty good buying signal. So at any rate, the S&P moved back up over its 20-day for most of the month of May and into June. Now it's back testing that line again at 242 and change. Our question is, can the SPY stay above this line in the coming week, or will it need to ride back down to the 50-day moving average again at 239.26 right now? Now, if the SPY slides below that number, below that line, and closes below it more than 3 times, 3 closes below the 50-day moving average, can really pressure the market lower. Excuse me, that says the the bulls aren't coming in to boost this big index back up. So I will become a lot more cautious if the SPY falls below this line and kind of into this warning area you see here, because this is quite an indicator for our market in general. Of course, there's always There's always the chance that the SPY could come down to the 50-day or not even that far and rise up and head up and continue the uptrend. So that could happen too. We'll just have to wait and see in the coming week. Now the RSI here is kind of hard to see for you probably, but it's just following price pattern here. It's heading down, back down toward the 50 range. MACD is totally neutral. So let's go on to our next chart, which is a chart of the PowerShares QQQ. We haven't looked at this in a while. Now in Toni's Market Club, we watch the QQQ fairly closely. It is the top 100 non-financial stocks in the NASDAQ Stock Exchange. And we know that it has been pumped higher, especially in the last few months, by what we call the FANG stocks, of course, Facebook, Apple, Amazon, Netflix, and Google, or Alphabet. And we know that those 5 stocks have been really pushing the QQQ to just a series of all-time highs. Now, on June 9th, the QQQ touched an all-time intraday high, as I'm putting right here, pointing to right here, and then started to move down fairly quickly here, you see after that. Now, note with me that since last December, when the QQQ jumped over its 50-day moving average, it has stayed above it for 7 months. And when it came down to it in April, you see that bounce right there off the 50-day moving average. That was actually another buying opportunity. And then, of course, you'd put your stop right underneath the 50-day moving average. But the Qs didn't go below it. They bounced up over the 20-day again and made their way up to where they are now. Now, a 7-month run for any asset group or any stock for that matter, without moving down and taking a rest below the 50-day, is one heck of a run. And this uptrend is getting a little long of tooth here. So again, on June 9th, we had a new intraday all-time high of 143.90. Today, the Qs, as you can see, are below their 20-day moving average. They're sitting on the 50-day moving average that comes in at $137.39. So we do have some price support. We do have price support right below here at this price support line here, which is at 135, very close to 135, and then on down. But what I want to be careful of here, and what I'm going to keep my eyes on, there's a lot of volume going on right here. I'm going to keep my eyes on this 50-day moving average. If the Qs go below it and they have 3 closes below it, then I'm definitely going to be more cautious. And an alternative to that would be a big red candle. And of course, we hope that doesn't happen, but a big red candle in the coming week that plunges directly below it. Then we need to be more careful. It's actually a good thing because it will give us a lot more opportunities to get into some stocks we want to at a better price. But we have to be wise, and we do need to be cautious and keep the profits we have in our open positions. Our last chart for the day is the Guggenheim Solar ETF, symbol TAN. We looked at this a few weeks ago, and it bounced up in February, March, and then it rolled back down, looked like it was going to come back up, then started down again. And you have to know here that the Guggenheim, or any solar ETF for that matter, solar companies, a lot of times they'll follow the direction of the price of oil. So, and they'll usually even sometimes move ahead of oil in the very, very short term. This Guggenheim Solar ETF has companies in it like First Solar, GCL, Poly, Solar Edge, Canadian Solar, SunPower. A lot of these are companies from around the world. This is not a U.S.-centric ETF, so a lot of the companies you may not have heard of. When I captured this chart today, TAN was trading right below its 200-day moving average at $18.27 and just above its 50-day moving average. Now, pardon the pun, but to me this is more like a summer stock. or a summer position. Yes, we're talking about suntans here. But this is also a very mild-mannered. Once in a while it gets its giddy-up going, but usually this is an orderly, mild-mannered exchange-traded fund. It does not trade a huge amount of volume. It's not a day trading kind of fund. However, as you can see, it's rather mild-mannered. One thing I noticed here, and I'm not sure I can draw a straight or a trend line here, but if I could, you would see that the tan is making higher lows here. It's almost hard to see, but if you adjust your eyes from the beginning of 2017 into April, higher low, May, even higher low. So if it comes down to the 50-day moving average, which comes in here at $17.95, what I'd like to see here is I would like to see tan, from my lips to Tan's ears, I'd like it to see it drop down to this 50-day moving average at around 18 and then bounce off of it. And if, because oil's had a long stretch down, if for any reason oil starts up, then tan will probably pop as well. But I think this higher lows, just very subtly, kind of secretly, nobody's paying attention. I think this is something to look into. And of course, in the last couple of years, tan has been trading at a much, much higher price than it is now. So it's certainly got room to grow. So we'll see if it can break out of this. I'm not going to get in it right now. I'm simply going to watch it. I'm going to watch it into next week. If it can stay above the 50-day moving average and start to bounce, I will probably be a buyer of this ETF. I will stay in it as long as it's above the 50-day moving average. Should it fall below that, I'm out of it. Or if it closes below that, I'm out for sure. Okay, so now that's good. And now on to this week's economic reports. But first, please join us for Toni's Market Club this coming Monday, June 16th. We will talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. And I do give you trading ideas in Toni's Market Club, 3 long ideas and 2 short ideas every week, along with entries, protective stops, and price targets. Then each Thursday, if you're a member, you receive the Thursday update, and that tells you how to manage your trades. So please join us. For those who cannot attend our live session, it's not a problem. The recording of our session is available to all members a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. Next week's economic reports, not many of them. Wednesday we have existing home sales and crude inventories. Thursday we have jobless claims and natural gas inventories. Friday we have new home sales. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.